Welcome to the room. Nice to have you guys here today. I'm a minute early. I am a minute early. That's okay. Happens sometimes, right? Go get her. Gotta love it when you like your job enough to show up early. Good morning, Steve. Good to have you. Bob, good to see you. It finally stopped raining. We stopped 2 days ago. Today is absolutely gorgeous here. It's going to be 80 and sunny. Tea time is booked. So, it's nice. Yeah, you guys got everything that we got first, I think. We just passed it over to you. You're welcome. Welcome to the room, guys. Great to have you. I'm excited about the day. Excited about really everything. I love this stuff. I hope you do too. Just a reminder, hitting news every day. Today is Tuesday, April 8th. Man, we're like a third through the year already, or a quarter through the year. I stink at math, third almost. And there's really nothing going on today, guys. There's no news to speak of, no high impact news, nothing that could create mass chaos other than what's already creating mass chaos. Good morning, Joel. It's been pretty wild the last few days. I refuse to get political in the room, but there's just no doubt that the tariffs are creating an impact, right? There's a lot of scared people. There's a lot of movement and motion. And it's great for us, guys. It is absolutely amazing for us because whether the market goes up or down, as long as it's moving, we have an opportunity to capitalize. And we're going to do that with the high probability trend trade first. And man, you guys are showing me every day how you can take this software, how you can learn to read it, and then find your own plans. And you guys are so good at that. Everything that I talk about in this room, well, I'll say 90% of it, some of it just flies off the cuff, comes from the Nexgen page, nexgent3.com. More specifically, the trading guide. This is where the rules that I discuss each day can be found. This is where there's ideas on management. And when you begin to break outside of the very basics, there's stuff on trading psychology, market replay routine, using market flow for you guys that feel like you need a little bit more, swing trading, crypto, how to get to all our socials, all that good stuff, guys. That's all on the Nexgen page. But what we're going to do, it's pretty much what we did yesterday, and to be honest with you, it's what I'm going to do tomorrow. We're going to talk about a high probability trend trade, guys. We're going to build a foundation. We are going to discuss this trade that only has 3 rules. And this is a trade that typically wins. Hey, good morning, Miss Trina. Like that chili dog that you took. We're going to talk about it, though. We're going to talk about it. Guys, there's 3 rules that we're going to discuss for this highest probability trend trade. And the goal of learning these 3 rules isn't to make you some master trader. I know everything about the market and what it's going to do. These 3 rules, this one trade is going to teach you to read your indicators. You're going to learn to read your charts. And you're going to learn to listen to what your charts are telling you. And that's kind of a cool thing. And what you're going to find, usually by the second or third day you're with me, is that there's a lot of waiting in day trading. There's a lot of sitting still, a lot of doing nothing. 90% of your day, I would probably wager to say it was more like 95. But 90% of your day is just reading indicators, waiting for advantages. And when the advantages are present, that 10%, that other 10% of your day will be actively trading. And you'll find that very often less is more. And that's the approach that we're going to take this morning, that less is more. And once you can read your charts, once you understand what the indicators are telling you, you will understand where the market is likely to continue. This becomes your entries. You'll be able to look at your chart and say, wow, the trend is going this way, the market's moving this way, but there's a little bit of a fight. Let me pinpoint where that fight's probably going to end, and that becomes your area where the market is most likely to continue. You'll understand where the market is likely to go. You'll be able to use key areas and patterns to make intelligent choices on your targets. And then finally, you'll understand where the market is likely to stop. And we call these likely to stop areas termination conditions. And I believe termination conditions are probably the most valuable lesson that you can get, because that's what forces the 90%. That's what forces you to be patient. That's what keeps you from what I like to call avoidable losses, because you'll understand exactly where the market is likely to stop, and then you'll have the ability to make the choice to not take a trade directly into that area. So we will focus on this high probability trend trade for the better part of the morning. It's only 3 rules, like I said. Each rule, when true, creates an advantage. And the recipe for a trade is the 3 advantages: momentum, clear path, and entry. So if you're brand new with me, momentum and clear path, this is your core. This is your foundation. This is still the very basis of everything that I do every day, guys. Once you can understand a market that's moving in the direction of the trend rapidly, that advantage of momentum through strong triggers, and you can say to yourself, there's nothing in the way that could create a bounce or stop this thing cold, you have the clear path. And guys, these 2 alone are enough to create a very profitable, a very consistent trading plan. Your 3rd rule is the entry for the trend trade. It's pinpointing precisely where the market is most likely to continue. And your entry area is the part of your plan that will probably grow as you grow. So we're going to focus on each of these rules individually. We're going to break them down, how to study them, where to study them. I'm going to give you every tool that you need to study them. And of course, the room is open for any questions that you have about them as we discuss them. You're going to find these 3 rules met on only 2 charts. Pete and I were having a great conversation this morning, how he was talking to some friends that were in Chicago in the CME, in the pits. And when Pete was a brand new trader, Pete, I hope you don't mind me sharing the story that you put in there. I'm just going to read it because it's pretty cool. Pete says, I grew up in Chicago, and a lot of my friends worked at the CBOT and the Merck as pit traders. One S&P trader, who he's still friends with, when he first got Nexgen, went out and got a 6-screen Falcon computer, and he remembers talking to him about them. And Pete was bragging, I can scan 6 commodities at once and trade them all. And the pit trader said, why don't you just pick one and master that? And Pete took that to heart, and that's why he only trades oil. Very often we get sucked into that siren song that more is always better. But it's really not, guys. There can be a very simple approach. There can be a one market approach, a one trade approach. And you can still find all the success that you need in your day trading. And very often simplicity pays the highest dividends. So we're going to look for these 3 rules on only 2 charts. Your first 2 rules come from the large chart. And the large chart is a very slow moving chart. It's a broad stroke of a brush. It's difficult to see change on, which means that when you have those first 2 advantages, when you define the momentum of the market, when you understand whether or not your path is clear, those advantages stay pretty constant. And then you'll go to a smaller chart, a faster chart, and you'll take that one bar on a large chart that gives you direction, momentum, and areas, and we're going to refine it. We're going to look at the inner workings of that, and you're going to use those inner workings, 20 to 30 bars, to pinpoint right where the market is most likely to continue. And this becomes your entry for the high probability trend trade. And by using a refinement chart, one that shows change, and you refine that chart that isn't showing it very quickly, guys, you can reduce your risk and you can increase your profit potential very much. And rule number 3 is just an entry rule. And we use the 2 charts, and only 2 charts, well, mostly because that's all you need, but it really is. It's a great reflection of who you're trading with or who you're trading against. The large chart leads the way, guys. The large chart is the one that sets the course, and it's the large crowd. It's the men and women with the ability to create trends, to create momentum. These are the people that react at key areas. And when you trade with the large crowd, guys, this is the world's greatest lazy river. And you're on your float, pina colada in hand, and you're enjoying the ride. You're enjoying the fruits of their labors. And that's what we think of a large chart as. The small chart is like those yahoos that really like to fight. And when the large crowd's like, hey, everybody, let's go up, and everybody's totally in sync with it, the small crowd shows up and says, but we really want it to go down. Maybe they're looking for a better position, a better entry. Maybe they're taking profits. But they create these little ripples in the matrix, guys, and these retracements, these pullbacks, these fights. They don't last typically. They typically fail 70 to 80% of the time. So when you're following rule number 3 on that smaller, faster chart, you are literally pinpointing where that small crowd is most likely to fail. And that happens to be where the market is most likely to bounce and continue with the trend that the large crowd created. So know who you're trading with or who you're trading against. And then this is kind of our morning. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. I say we, I mean you, because I know them. I'm pretty good at them at this point. You'll have the ability to simulate, whether you are on a demo, whether you own software, lease software, you have the ability to stay in that safe arena as you learn these rules, as you recognize these patterns. And the first step to becoming a confident trader, ASAP, and I don't believe you ever outgrow the need for feedback. I know I haven't. Post your pictures in class. Show me what you're doing. Talk about what you're doing. Give me the ability to give you feedback on what you're doing. So every time you post in the room, write the whys. Describe your advantages. Tell me why you did what you did. Show me where you did what you did. And my promise is that every time you post in the room, you and I will have a private session together. We'll celebrate all the victories. We will work through any challenges that you're having, how to fix them. And the great thing is it typically takes me 4 or 5 pictures from you to recognize what your tendencies are, what your thing is, whether it's breaking rules or following rules, whether you don't have the patience needed just yet, or if you're super patient. And we'll go through each and everything that you post in the room, and I'm just going to talk about what you did right and what you did wrong. And anything wrong, I'll give you the answers to make it right. And anything right, we're going to high five, guys. I love to celebrate victories. But the goal is that you're always practicing the correct rules, because your rules describe a pattern. That's all the high probability trend trade is. And that pattern is testable. You can back test it, you can verify it, and you can prove that it wins more than it loses. So when you focus on rule adherence, you're focusing on something that has been proven by you to win more than it loses. And the goal is that you don't practice the wrong trades. And I'm not saying don't take the wrong trades, because you probably will in the learning process. Be okay with that. That's part of it. But don't practice breaking your rules, because what happens is simulator seems to make you a millionaire almost instantly when you practice the wrong trades. And then that luck runs out the second you go live. It's like they have cameras behind you. So simulate, practice, post, guys. And then we're going to simplify. I'm going to hand you a plan. It's called the KISS plan. And the KISS plan has 2 trades on it. The first trade is the high probability trend trade, the best of the best way to take it. And once you learn to read your indicators, you go from that high probability trend trade, which is defined as a trade where each indicator on every chart agrees with the rules for the trade, and it opens the door for what we call a medium probability trend trade. And a medium probability trend trade means that most of your indicators agree for the trade. However, a small issue exists. You're going to rely on your ability to read your charts to recognize that issue. But you've got to know what looks you're going to commit to. You've got to know what it looks like to have that high probability trend trade, so that you can recognize when it's not as high probability as you wish it was. And in order to get these easy, to recognize them, to commit them to memory, to slow down the market and to never hesitate, go to that second step. And that's post your real-time performance in a spreadsheet. And the spreadsheet that I'm going to give you isn't just for real-time performance. I've modified it a lot to make it an educational tool as well. And it has 4 tabs. Your first tab, these are the rules. Strong triggers, that's rule number 1. They're in bright green. Green means go, right? And then clear path. Both of these are your core, your foundation. And you should learn exactly what these look like, learn how to commit to these. And then in red, you've got what it looks like when your rules aren't met. Because if you wake up every morning and you say to yourself, I'm only taking a trade when my rules are met, I refuse to take a trade when they're not met, you have to know both sides of the coin. Hey, good morning, Mighty Max. Let me try and refresh it for you and see if that helps. 1 second. There we go. There was the reboot. Did that get you? Awesome. The second tab. This is client trades. This is you guys. And I can't tell you how much I appreciate you guys because you post in my room all day long and you show me these amazing trades and your ability to use the software and do well. So when they fit the plan, I steal them and I drop them in here. And this is a great study guide for you newer users, even for you older users that are trying to get back to basics. So go through, but remember, they are client trades. They're the client's perfect trades. Maybe not always the high probability trade, but you'll notice that there are advantages and they're annotated. Go study those. There's the entry sequence for the long and short trade on the small chart. Everything that I do is very mechanical, very if-then. So that's all there for you. There's ideas on management, very, very basic. This is in your beginner's plan. And then there's ideas for when you can start to break outside of that, to manage a little differently using your chart reading. And then patterns that repeat themselves. And I like this section because in the beginning, I really do, I harness you in a little bit. I'm like, focus on this, learn this, make this easy, get great at one thing before you start looking for other things. And once ideas like momentum and clear path become kind of second nature, and it takes you literally a second to recognize it on the large chart, you begin to recognize patterns outside of the high probability trend trade. You begin to see things happening over and over and take a lot of pictures of those and go to the build your plan. Take those patterns, drop them in here. And the great thing is every time you see a pattern, you can drop it in the room and say, hey, Mark, I keep noticing this. Is there something to it? And if I've got anything for you, I'll give it to you. And that's kind of how you guys will build your plan. So in the beginning, your personal trade setup looks high probability trend trade. Take 1,000,000 pictures of it. I'm going to teach you how to study it, know exactly what it looks like so you never hesitate. You'll learn to manage. There's the patterns. And then finally, trade tracking. And this is that second step in becoming a confident trader. Take pictures and annotate everything that you do. Every time you enter the market, every time you exit the market, take that picture. And don't just take it. Write all over that chart, guys. This is how you get to where you want to be. Identify your triggers and whether or not they fit rule number 1. And talk about your areas and whether or not rule number 2 was met. Define your entry over here and write the rules for entry on the chart, making sure that you got it right. And don't forget to throw your exit in there as well. A lot of people love to show me their entries, but they hate to show me the aftermath. I want to see the aftermath. And when you write the whys, this is why I did what I did. Strong triggers, clear path, entry area. You're creating this recipe, and the recipe makes it repeatable. And that's the goal. The goal is to be able to do the same thing every time you enter the market, to be able to manage the same way every time it's time to get out of the market. And it's that repetition, it's that repeatability that leads you towards success. So don't skip out on this one. And then more importantly, go back and study them. So every morning, I look at what I did yesterday. And I still do this. I've been doing this for 5 years. Every morning I look at yesterday's trades and I ask myself what worked and what didn't work. And what I find is what works is following my rules. And what doesn't work typically is breaking my rules and trading my opinions. And that's kind of the broad stroke of it. But if you've talked about what you did and where you did it, and most importantly, if you've accepted that feedback from class and dropped it into your spreadsheet, not only are you going to recognize patterns that are bringing you success and taking success from you in the market, but what happens is you begin to recognize the patterns in yourself. You'll start to see things like into a termination condition, right? That's the feedback. And then you go to the next trade that you took yesterday, and it says into a termination condition again. And then you go to the third one, and it does it again, and you're like, oh my gosh, I keep trading into termination conditions. Maybe I don't understand the concept, or maybe I'm just stubborn and I think they're going to break for me. Either one, but you'll begin to recognize the patterns in yourself, guys. And it takes me 4 or 5 pictures. That's it. 4 or 5 pictures that you post in the room. I'll begin to recognize your patterns and your tendencies. And if they need a little adjustment, we'll work on it and we'll adjust them together. So our first hour, I'm talking a lot. We're going to learn the rules. You're going to learn the rules. I'm going to give you everything you need to study them. You're going to simulate them, post in the room. You're going to say, hey, Mark, I want a session with you right now in front of God and everybody. Tell me if I read it right. Tell me if I entered in the right spot. Tell me if there was a way to manage it better, because I want to be a better day trader. I want to be consistent. I'm going to hand you a plan that's been designed to optimize your chances of success. And we're just going to do repetition, guys. Repetition to create recognition. So let's start with the indicators. What am I looking at? I open up my workspace. I'm a brand new user. What the hell is going on that chart, guys? First thing you're going to notice is triggers. Both charts will have them. There are small triggers, 2 solid lines. They're a fast-moving average. And they look the same no matter what time frame. It's 2 solid lines. Your large triggers are the dashed lines, and they're a slower moving average, and they look the same no matter which chart you're looking at, large or small. If they're going up, they're green. If they're going down, they're red. You don't have to know the math that goes into creating them. You don't have to know what the average is of what or whatever. The only thing you need to know is small and large. And you're going to use these first to define the momentum in the market, to make sure that rule number 1 is met. You'll also use the trigger lines to define those termination conditions, to make sure that rule number 2 is met. And then finally, when you go to that smaller, faster chart, you'll use the trigger lines to define your entry. So trigger lines show up in everything you do with the software. Areas will too. Both large and small chart have areas. Areas have names. And again, I'm going to encourage you, don't overthink it. You don't have to know how the areas came to be. Know their names. Divergence high lines. It's a magenta line. It prints off a pivot. It means there was a loss of momentum. So maybe scribble that down. Divergence is synonymous with loss of momentum. And their magenta is at a high and cyan at a low, which means pink and baby blue for you guys that aren't super artsy-fartsy. There's red Fibonacci resistance, horizontal line runs across the chart, blue Fibonacci support, yellow 1-to-1s in a mid-band. Depending on the chart, they have a different role. On the large chart, these are the locations where that large crowd are making decisions, where they're entering, where they're exiting, where they're fighting. On a small chart, we're going to use some of these for entry. So what we're going to do is we're going to break down the individual rules, and you guys are going to take these indicators and you're just going to learn to read them. So rule number 1 says that the large chart, the big chart, the slow chart, the large crowd, it must have strong trigger lines because we're looking for the advantage of momentum. And in order to have strong trigger lines, first you have to be trading with the trend. It's the only way to do it. So defining trend on the large chart. If it's going up, the background will be green. If it's going down, the background will be red. And it doesn't mean jump in. It means look for your rules to be met to trade in the direction of the trend. Strong triggers in an uptrend means that your small and large triggers are just as green as the background are. And if the colors don't match, you actually can't have strong triggers. In a downtrend, everything is red. And what it means to have strong triggers, guys, and it's a very specific look, and it has nothing to do with price bars, and it has nothing to do with Fibonacci areas. It's literally triggers. Your small triggers will be up and above the large triggers in an uptrend. They will be down and below the large triggers in a downtrend. And it's that space that's created between the two. It looks like scissors that are open. When your scissors are open, you have strong triggers. And when you have strong triggers, this is my favorite phrase in all of trading, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is our battle cry. Odds favorable momentum is rule number one. You're going to see it annotated on charts all day in this room, OFM. And when you have strong triggers, the market is likely to continue in the direction of the trend. When you have strong triggers, that's what it takes to break those key Fibonacci areas, or at least make us believe that they have the opportunity to break. When you have strong triggers, it can cover some of the mistakes that new users make, and it can even set up the ability to make some exceptions as a more familiar user. And when you have strong triggers up, that one bar on a large chart that lets you know the triggers are strong, sometimes they sprout a tail or a wick. And these tails are actually potential entries on that smaller, faster chart. So when you see all of that strength in a tail form, or historically you see that the tail had formed, understand that these are potential entries to go in the direction of the trend with all that momentum. But scissors close, momentum dies, and when the small triggers work their way inside of the large triggers, guys, this is what we call a weakening of the large triggers. And when I have weak triggers, anything can happen up or down. And you'll even see that annotated on charts. ACH. Strong triggers leads the way, pushes the market. Weak triggers, guys, this is where sometimes I get bigger retracements from the middle of nowhere. Weak triggers are where key Fibonacci areas are more likely to hold to stop that market. So as a brand new user, I'm going to encourage you, know the difference between strong and weak. And if we go back to the S&P right now, it's not difficult to recognize when there is space between the small and large, it's strength. When the smalls are inside of the large, it's weakness. And one of the things that you'll notice is that strength tends to push. And weakness, look at the big retracement. You'll also notice, that I'm killing Snagit. Weakness, even from the middle of nowhere, can create retracements. And strength isn't guaranteed to push the market when there's something in the way to stop it. And that's our segue to rule number 2. But first I want to ask, is everybody cool with that? Strong triggers, guys. This is the advantage. This is the one that really sets the tone. And once I have those strong triggers defined, I have to make sure that I'm not trading into an area that could stop the market, a termination condition. Because if there's none present, I've got room to make a little money. If there's none present, I have what we call a clear path, guys. And this is the second piece of the foundation that we're building. What is a termination condition? I'm so glad you asked. A termination condition is pretty much a horizontal line on the large chart. The large chart defines terminations. These are the areas where the large crowd is making decisions. Where they buy, where they sell, where they fight, where markets reverse, guys. It's a horizontal line on a large chart. So we're going to use a comparison of the trigger lines and that area to define them as termination conditions. And since these areas are where the large crowd are making decisions, the first step in defining a termination condition is allowing price to reach that area. The dynamic Renko bars, your price bars, get to Fibonacci resistance. And once price reaches the area, we're done with price. The decision making starts, and the triggers are going to tell you everything that you need to need to know. So when price reaches resistance, I want you to ask yourself, where are the triggers? Um, is entering in the scissors created between the S7L large, small and large? So Mighty Max, large chart is going to define the momentum. Large chart is going to define the termination conditions. Entries are going to come from the smaller, faster chart. And what you'll find, if you'll let me get through termination conditions, we'll go back and show you. And we're going to go through, hey, good morning, Cav, step by step, how to pinpoint your entry. So we're not going to use those scissors on the large chart to do it. That chart is way too slow, Mighty Max. We're going to use a refinement chart to pinpoint and reduce risk. So let's get through termination conditions, make sure nothing's in the way, then we'll go to entries and we'll knock it out for you. Cool. So repetition, guys. Repetition creates recognition. I can't stress that enough. So every morning, I remind you guys where to find your rules. I'm just going to do it one more time. Let the large chart do its job, momentum and path, and then we'll find that entry. But let's define them. So price reaches the area, sets off the decision-making process. The large crowd says, oh, we reach resistance. And all you have to do is say, where are my triggers? That's it. Your triggers will tell the story. If your triggers remain below resistance, large and small, guys, you have a termination condition. And a termination condition may reverse the market. All caps, may, might, could. It could break, to be honest with you. It might reverse, it might break. It might create a big, ugly, untradeable bounce that pulls you out of a long position. Or it could just set off a fight between the buyers and sellers that lasts for who knows how long. I want you to understand and accept from day one, you will never know what the reaction is going to be. You'll never know if an area is going to break. You'll never know if it's going to create a fight, an untradeable bounce. You never know if it's going to reverse. So if price reaches resistance and your triggers remain below, all you have to say is rule number 2 is not met. I'm not going to take a trade into the area. Price bars come down, and right about here, new users say, oh no, there's a blue line off in the distance. I can't take a trade. Guys, until price reaches one of those lines, that line, it's a target if you're headed that direction. But once price reaches support, we're done with price. Let's go to the triggers. Where are my triggers? And if they remain above, it's a termination condition. It may bounce, break, it could create a fight. It may reverse the market completely. You'll never know. So if rule number 2 isn't met, if it's defined as a termination condition, no trades into the area. Let it be that simple, new users. There is one look that I want to point out. If price reaches resistance and none of the triggers get above resistance and the market ends up reversing right from that key area, what does that mean? That means that the large crowd, the people in charge, made a decision that was so impactful at a key area that it reversed the market and sent it screaming the other direction. We call this a strong top. The same is true if price reaches support and the triggers don't get below. If it reverses the market and sends it the other direction, guys, that's a strong bottom. And a strong top or bottom is the precursor to the highest probability trend trade you could ever take. A strong top or bottom is rule number 1 for most of the trades beyond the high probability trend trade. It's not a rule for it, but it is the precursor for the best of the best. So this is what it looks like if the market reverses. You'll look for the short trade. You'll look for the long trade. This is what it looks like if it breaks. And they break all day long, guys, typically with momentum. So the number 1 here is that price reaches resistance. And once price reaches resistance, guys, every time it reaches resistance, at least for a moment, it's going to be a termination condition. The triggers are still below, and you're just going to wait for the reaction. You realize you don't have a magic 8 ball. You don't have to predict. just wait and see what happens. If it's going to break, then both small triggers and large triggers will get above that area of resistance. Notice that I don't say price. Once price reaches, we're done with it. The triggers tell the story. And if your small triggers and large triggers get above Fibonacci resistance, yellow 1-to-1s, divergence highs, that area is considered broken. It'll actually behave as support, and your path is clear. And with that momentum, you're looking for entries. You're looking for pullbacks on a smaller, faster chart. And this is the black and white for new users. It's either a termination condition or it's a clear path. Your path remains clear until you hit the next line, and then you go right back to number one, right back into that process of, oh man, I reached a line, where are my triggers? There's a transition look, and this is number 2, guys. And this is when smalls smash through the area. And I really try to throw emphasis on smash, 2 to 3 points above. And if the smalls smash through the area, and you have odds favorable momentum, but the large triggers are still below, meaning that it's not broken yet, that momentum in the trigger location lets you know that this has the potential to break. And there are a lot of trend trades to be had with the potential to break, but it's not a clear path, which means that you've got to focus on the momentum and make sure you're not sacrificing it. You're going to define your entry and make sure that it's low risk. And you'll manage assertively. This is that medium probability trade. So for the brand new user, it's either a termination or a clear path. Understanding that within a week or two, it opens the door for that second trade that's going to be on your plan. We call this a 50-50 trade. Very clever, right? 50% of my triggers are through the area, 50% are not. Same's true going down, guys. Price reaches support. Where are my triggers? Oh my gosh, they're all above support. Let me sit on my hands and wait for the reaction. Now it has the potential to break. I'll make sure that I have momentum. I'll make sure that I don't sacrifice anything there. And then once it's a clear path, guys, it remains a clear path until you reach the next area. Let's see if any of these work in the real world. This is the S&P. This one had the potential to break but didn't. And then it retraced all the way to yellow 1-to-1s. Price reached the area. The triggers remain below. And sure enough, big untradeable bounce. Weak triggers and another retracement. Right back to the divergence high in 1-to-1s. Triggers remain below. Terminations, rule number 2, keeping you out of a range. Divergence low. Retracement to resistance. Divergence low. And now they try to break out. And you see that potential to break, but it doesn't. Perfect termination, perfect termination, perfect termination. Guys, you know exactly where these are. You just have to learn not to trade into them. And it happens again, and it happens again. And here you can even see support break and behave as resistance. And now currently, most current bar, you guys have momentum with the potential to break this Fibonacci area. So keep it simple. Keep it very simple. You'll find more opportunities. But you have to realize that there will be times when your path isn't clear. We just saw that. We just watched rule number 2 define a range, and you guys could use rule number 2 to define when to get out of that range. K-Dog! What's up, stranger? There'll be times when your path isn't clear because the areas are stacked, because it's fib after fib after fib. And guys, this is 90% of your day. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is not actively trading because you don't want to trade into areas, because you don't want to trade without momentum, because you're all about the advantages. Guys, the futures markets trade billions every day, sometimes trillions. And all you need to make is about $400 a day to put yourself in 6 figures. And that's pretty easy when you have momentum and path, when you hold out for those first 2, those core advantages. Is everybody good? Can you give me a why if you're with me? Termination conditions. Price reaches. Where are my triggers, right? Awesome. Large chart. We see this on the large chart. But there is one small chart termination condition. And Mighty Max, this is a great visual of how that refinement chart breaks down just one bar on the large chart. So the large chart says down, it has strength and the potential to break, and you're like, yes, let's find an opportunity. If you ever see three divergences in the same price range on your small chart, it may terminate the trend. It could create a big untradeable bounce. It doesn't qualify you for a strong top or bottom. That's a large chart thing. But this is literally your small chart giving you a heads up. I know the large chart says down with strength, but things are changing. We're losing momentum. We might push up a little bit. So three divergences in the same price range may terminate the trend, guys. It can happen on a big chart or a little chart, but you're going to see it on the little chart first. And that's the only time that I won't go look for an entry. If my large chart has momentum, if the path is clear, I'm chomping at the bit to pinpoint an entry. But if I go over to that small chart and there's three divergences, I'm going to pump the brakes and wait to get to the other side of them. But if they're not there, this is where the magic happens, guys. You're going to use a limit order to buy or sell a pullback at an area inside of triggers. You're literally going to wait for the small crowd to fight, and you're going to pinpoint where their fight is most likely to fail at areas. Fibs, midbands, or yellow 1-to-1s, but they need to be inside of triggers. And this is such an important thing when we're describing the entry. Because price returns to large triggers, guys. Price returns to large triggers on the big chart and the little chart. They're moving averages. And what did somebody call it? It was the regression or the remission or something of the mean. Math guys, help me here. But they're moving averages, and they return to the large triggers on the small and the large chart. So your entry chart has both sets of large triggers. The 5-1 large triggers will be reversion. Thank you, Gino. Large chart and small chart have them both, but the small chart ones are smooth. The large chart kind of have steps. And we're going to use these triggers to define where the retracement is most likely to occur. And that's all it is. You could draw a box from the highest line to the lowest line and say this is where that push down is most likely to go. That's what the triggers will do for you. And when they are what we call favorable, one on top of the other, this is when you have the smallest possible space to define that retracement zone. So for brand new users, favorable large triggers is going to increase the accuracy a little bit. But understand that once you know that this is going to define the retracement zone, it's going to help you pick out your entries. It's going to help you define your risk. And we're going to do that right now. We're going to define an entry where the small crowd is most likely to fail. And it all begins on the large chart. Remember that. It all begins with a large chart telling you, I have the direction defined. My momentum is present because of rule number 1, and my path is clear. My path is clear because of rule number 2. Now and only now, let me go to the small chart and pinpoint an entry. So once the rules are met on the large chart, I go to the small chart and it's going up, and it's going up fast. And you're going to get that fear of missing out. You met your goals with that look, Cav? I love it. I think there's going to be a lot of goals meeting early in the market this week. While everyone else is panicked about the volatility, you guys are capitalizing. It's fun to watch. Everything's going up, guys, and we need a reversal bar. We need the beginning of that pullback. We need the small crowd to fight. So once I get a reversal bar, it's not my entry. This signals the beginning of the retracement or the pullback or the fight, whatever you want to call it. And I know that price tends to return to large triggers because Mark said it in the room, and Mark wouldn't lie to me. So I have large triggers and synthetic triggers, 5-1 and 13-2. So from the highest line of the large triggers to the lowest line of the large triggers, guys, this defines where the retracement is most likely to go. And the tighter they are, one on top of the other, the smaller this area becomes. That helps with accuracy. But our entries don't come from triggers. Our entries are kind of like saying, hey, this is where it could go. The areas will define where it's most likely to bounce. So once I identify my trigger lines, I understand where the market may return. I need an area. Areas can be fibs, midbands, and yellow 1-to-1s. That's your whole list. Don't modify it. Fibs, midbands, or yellow 1-to-1s. And notice that it says inside of triggers. Areas inside of where the market is most likely to retrace. Because fibs, midbands, yellow 1-to-1s inside of triggers can create those bounces the same way they create a bounce on the large chart to define a termination. So this box, from the highest area inside of triggers to the lowest area inside of triggers, this is your window of opportunity, guys. This is where the market is most likely to bounce in the direction of the trend that's been established on the large chart. This is where the small crowd's fight is most likely to fail, typically 70 to 80% of the time when the rules are met. So you're going to activate a limit order, and you're going to wait 2 ticks above that highest point of support inside of triggers. And you're going to say, this is all I can do. I can't do no more. It's up to the market to give me my entry. And if they do, you're in a long position. You've bought the market. And you're now in a position with the advantage of a market that's likely to continue in the direction of that trend because of the strong triggers on the large chart. And there was nothing in the way on the large chart to create an untradeable bounce. And you've entered right where the market is most likely to continue. And this is your high probability trend trade entry. So Mighty Max, what you're looking at, that whole retracement, that whole bounce at the areas inside of favorable large triggers. Reversal bar, define the retracement zone, where it's likely to bounce, 2 ticks above. Reversal bar, where it's likely to retrace, where it's most likely to bounce, 2 ticks below. What you're doing is this pullback is that tail on a large chart, but we can't time the tail. We're predicting right where the tail is most likely to form using areas inside of favorable large triggers. Does that make sense? So when the scissors are open and the path is clear, we're ditching that slow chart and we're going to that fast chart, and that's where the precision comes in. And you're going to say to yourself, I know where the market is most likely to retrace. I know where it's most likely to bounce. Any line below those triggers, that's where my advantage is lost. That's where rule number 3 is no longer in play. And I'm going to tell you guys from 5 years of experience, once you get to the wrong side of the triggers, below them in a long trade, you don't know if, when, or where that market is going to continue up. And once you get to the wrong side of the triggers in a short trade, above those large triggers, you don't know if, when, or where that market's ever going to go down again. So by defining where the market is most likely to continue, you have defined where the market should not go. It should not go beyond those retracement areas. It should not go beyond those areas inside of the retracement zone. And guys, your initial stop, your management strategy begins with a stop that is 4 or 5 ticks beyond those trigger lines, and we call it where the market should not go. And it's awesome because understanding where it should not go allows you to take smaller losses if a loss is taken. And those of you that are good at math know that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And if you ask this entire room to answer honestly, do you take losers? Everybody should raise their hand. You will take losses as a day trader. But the key is learn how to take acceptable losses. When you have momentum, when the path is clear, when you define your entry. And learn how to, I have none today too, Gino. I hit my goals at like 6:30 a.m. Central this morning. I'm golfing today. If this pushes beyond the triggers, that's acceptable losses. If you're trading into areas, that's avoidable losses. And then Mighty Max, here's the whole pattern. When the scissors are open, when the path is clear or has the potential to break, The very bottom of that tail, we can't time that out, but we can predict where it's most likely to form by using areas inside of favorable large triggers. And guys, this is your pattern. This is the high probability trend trade. This is what you need to be able to study, to recognize, to go back and learn to trust it. And when you open up a Ninja Trader that has crashed on you during the lecture, you go back to opening up Ninja Trader right live in front of everybody. Dag nabbit. So when we talk about entries, Mighty Max, let's go back and do them. And I've got, let me bring this up as well. And we'll do a bar by bar. We'll go back into the market and actually do it. Let me have that load up for me real quick. But what we're doing is let's go through it real quick. So we're talking on the small chart, and it begins with a reversal bar, and it signals the beginning of the pullback. And then you're going to look for your trigger lines, large and synthetic, and you're just going to make a mental box from the lowest line of the triggers to the highest line of the triggers. And Mighty Max, you're going to know that your entry needs to come somewhere inside of that trigger location. And that's where we look for areas, fibs, mid-bands, or yellow 1-to-1s. So always, and I think that that's one of the most important phrases that you can write on your chart when you annotate, is inside. And one of the things that you'll notice is when I teach these entries, every time I write inside, I do it in all caps. Because once you get outside of those triggers, it's no man's land. It's Mad Max wasteland. Who knows? Your advantage is gone. Does that make sense? And then you can study it by going back historically and just circle the tail. All of this has already happened. I'm going to go circle the tail. Where does the tail line up on my small chart? Well, it lines up right with support inside of triggers. And now, that's my pattern. That's what I'm looking for every day. So let's see if the S&P loaded up. It sure did. So I'm going to back up a little bit. And does everybody see that I have momentum and I have the potential to break here? And all I did was circle the tail. Are you with me on this one, Mighty Max? We're just looking at the large chart right now. Momentum, potential to break. So let's go see what that tail looks like on a smaller, faster chart. I scroll back. Man, this market is screaming again today. Whoops, 48. I went too far. $9.50, 49. Oh, there it is. So I found my circle. When the pullback began, Mighty Max and everybody else, the market was like right here. See how that black box right at the bottom of that one bar, giving me all that good information. Oops, well, I'm messing things up here. Wow, sorry. This market is absolutely screaming. There it is. That black box, this is where the reversal bar happens. And watch what happens if I extend that black box up to the very top. On my small chart, you can see that inside of that one bar is the full retracement. It goes right to the area inside of favorable large triggers, and then it continues down with all that momentum. So everything inside of that one bar that says we're going down fast and this has the potential to break, it's this right here. So what you're going to do, and let's do it this way real quick. Let's go through it just bar by bar. I'm going to take everything off of the large chart because I don't want you over analytical people talking about anything other than the pattern for entry. So we're going to let this come up with only trigger lines, Mighty Max. Maybe. I should have done this on crude oil. It loads faster. A lot less ticks in crude oil. And guys, you're going to notice with all this volatility in the market, your charts may take an extra minute or two to load. So while that's loading, there we go. And we're going to take off our cheaters. And here's what I want you to see. Large chart has momentum. Does everybody see it? Separation between the small and large. Large chart has a clear path. We haven't reached an area. There's nothing that the triggers are trying to break. Rules 1 and 2 are met without question 100% of the large chart. Small chart is absolutely screaming down. So Mighty Max and everybody else learning entries, as that market is going down, we're waiting. We're saying to ourselves, okay, not yet, not yet, not yet. All right, the fight is on. There's my reversal bar. So at the time of the reversal bar, you're going to draw a box, mentally or otherwise, from the lowest line, lowest point of the trigger lines, to the highest point of the trigger lines. You guys with me so far? And you're going to say, this is where the retracement's most likely to occur. This is where it's most likely to happen. But trigger lines aren't bouncy. Let me draw a box from the lowest area of resistance to the highest area of resistance inside of those trigger lines. And that box gets considerably smaller. And this represents where the market is most likely to bounce. And you're going to activate your limit order. And if they come up to that area inside of triggers, guys, you're in a short trade. Whoops. And there you go. Probably a tick below. Max, are you with me? Large chart hasn't changed a bit. Small chart's given the reversal bar, 4 more bars up, right to the area inside of triggers. And down it goes, right off of that area. And if I take that little black box and I put it right at the top of that move, it's right at the tail on the large chart. So once the large chart says go, small chart refines. And guys, you can scroll back and you can do this a million times. Just scroll back and there is momentum and path. Let me circle a tail. And let me scroll back and see what the tail looks like. Whoops. Let me scroll back to Thursday of last week. And let's see if it happened again. What time is that? 9:51. I'm going the wrong direction. It's probably easier to make that one smaller and make this one bigger. But there's our circle. Area of support inside of favorable large triggers. Once again, guys, this is your pattern. How about this one at the tail end of momentum? It was outside of the triggers. Maybe that's not your entry. And that's what happens when momentum starts to slow. It begins to push deeper. So you can go back and you can study this. With odds favorable momentum, hope it's on the wrong side. With a clear path, you're looking for pullbacks to areas inside of favorable large triggers. Are there any questions about the high probability trend trade? Guys, this is where I give you everything that you need. I'm going to give you this handout, which is Chart Reading 101. And all this is it's you remembering that strong triggers and no terminations is the core to everything. So this encourages you, doesn't demand, but I'm telling you, if you do this, you'll be a better chart reader. Go take 25 pictures each of strong triggers, of weak triggers, of a clear path of a termination. Guys, 100 pictures. And by the end of those 100 pictures, you'll never confuse strong triggers for weak triggers. And you'll never confuse a clear path for a termination condition. So you're going to take those 25 pictures, and here's the key. And guys, this is what's really going to do it for you, is you're going to write on the chart. And you're going to draw an arrow, and you're going to say strong triggers, smalls above, large, space between, momentum, rule number 1. And you're reminding yourself that this is your look. This is your best of the best look. And it creates a correlation between what the eyes see and what the brain believes about it. So take the time to do that. Post them in your spreadsheet. Study them a little bit each morning until you become confident at momentum and path. And then, guys, you have your core. And then this is the high probability trend trade checklist. This gives you the pictures. So this is your cheat sheet as you go through that task. This one actually is the market coming from a strong top or bottom. It reminds you that that's not a rule. You don't have to have this to take a high probability trend trade, but it adds some warm fuzzies. And a strong top or bottom is a no triggers through termination that reverses the market. No triggers through termination that reverses the market. Now it's a strong top. No triggers through termination that reverses the market. Now it's a strong bottom. This is the precursor for the highest probability trend trade. This is rule number 1 for that 50-50 potential to break. Do you have momentum? There it is. There it is. Make sure it's not a loss of momentum. Do you have a termination condition present? I hope not. It should be a clear path. And eventually, it'll be the potential to break. Know the difference so you know how to manage or when to avoid. And then defining your entry on that smaller, faster chart. So guys, this high probability trend trade, first one has all the pictures. Second one's just a printable version to put on your desktop. And nobody in the history of this one has ever done worse than 70%. I've had engineers back tested over like 400 days, and it was 82, 83%. And people tell me, usually when they're following the high probability trend trade, when they're focused on what we call the KISS plan, that's the third thing I'm going to give you. And they can do it without deviation from rules. Most people find themselves in the 80% range. And the KISS plan is designed to keep you focused. The KISS plan is designed to be a stepping stone in your journey, guys. And you know, I put that because so many of you feel like you need more. So many people want everything, every move, every tick, every dollar, instead of the best dollars. It's designed to be a stepping stone, but the reality is this could be your last stop. This could be what gets you where you want to be. I've had brand new users in their first 30 days with Nexgen get funded in prop firms by keeping it this simple with this plan. This plan is designed to optimize your chances of success with the high probability trend trade. And then through simulation, study, class feedback, continuous practice, you'll create your own plan based on your ability reading the indicators, guys. You'll put yourself in a position to recognize patterns, to manage differently, to maybe find a way to enter when the rules aren't perfect. And that all comes from the time you spend with the software, the questions that you ask, the pictures you take, the patterns you recognize. So until you can do that for yourself, this keeps you focused on the best of the best. Lance, welcome to the room. I heard you were going to be here. So there's two things that you need to know before you begin trading, not on simulator, guys. You have to know why you're going to enter. And the easy answer, the most effective answer, is because my rules are met. Because my rules are a pattern. They describe a pattern. They tell me exactly what I'm looking for this pattern to be met. And that pattern needs to be proven to win more than it loses. And that's a big part, guys. Why on earth would you trade a pattern that doesn't win more than it loses? So if you verify the pattern, if you trust it, if you study it, so if you go back and circle those tails and you see throughout the course of the day 5, 6, 7 opportunities to make money with a high probability trend trade, you're not going to hesitate when that pattern presents itself. In your rules, because you've proven it wins more than it loses, guys, it really helps remove the emotions of trading. You'll say cocky things like, man, they're going to have to come get me at the area outside of the triggers. I'm not going to give up my money with all of these advantages. And then you have to know why you're going to exit. And exits are taken either at profit targets. Initially, they're predetermined, and as you grow with the software, they'll probably change. Or when the advantages that you had to enter the trade have gone away prior to the targets being reached, which is why it's so important for you guys to speak to yourself in terms of advantages, to say, I have this, I have this, I have this, because then you can say, oh no, I've lost this. And guys, that's why you exit a trade, because your advantage goes away. So if I'm in a trade, a high probability trend trade, I take the perfect entry, and then the market goes 4 or 5 ticks beyond those trigger lines where the market shouldn't go. Guys, I'm going to exit the trade. My advantage is gone. I don't want to be in it anymore. If I enter the high probability trend trade, I get my great entry, and then 3 divergences print. On my way to my target, I have to say, oh no, my advantage is gone. I no longer want to be a part of this trade. I want to take the money that I've got. I want to get out of this trade. I want to wait for the next one. And it's that willingness to exit that is typically the most difficult for new users. You guys will jump in all willy-nilly all day long. But being willing to exit tends to be a little more difficult for most people. So define your entry. That's all we've done for an hour in this classroom this morning. Define your entry. Pinpoint where the market is most likely to continue. Great entries create manageable trades. And then you're going to manage it. And the same way your entry was just an if-then. If I have this, then I'll look for this. If I have that, then I'll look for an entry. Management can be just as mechanical, and that mechanical process really does help reduce emotion. So the KISS plan management is the most basic one that I could write. And it's based on 2 contracts. One to teach you to get paid, one to teach you to trust the large chart. And it's going to help you understand and trust stop placement. So your KISS plan, the management plan, is dependent on your ability to find these entries. So don't circumvent the most important lessons. If my entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. And I'm going to know where my risk is before I ever enter. I'm going to know that it goes 4 to 5 ticks above those triggers. And I'm going to know that my entry is at the lowest point of resistance. So before this trade was ever entered, I knew that I was going to have about $150 per contract. That was my risk. And if you're not comfortable with that, well, then you probably don't trust the plan. But if you're not comfortable with that, and you decide, well, I'll put $50 risk on there, and I'll put my stop right in front of resistance inside of triggers, you're more likely to get hit and watch the market run without you. You say, okay, well, 50 is too small. I'll go 80. But you're still in the retracement zone. Guys, you have to be willing to accept the risk. You have to put yourself in the kill zone to be successful in battle. Sun Tzu taught me that. And then your targets are predefined at $100 and $200. Don't touch them. Let them be. And guys, if they don't come get you, if this isn't part of that 20 to 30%, it means that you're getting a reversal bar in the direction of the trade. People love to throw around the phrase confirmation bar. Guys, it's only a confirmation bar if it is confirming from the area that now the market is moving in the direction of the trend, the momentum, and the clear path. If it's just an arbitrary reversal bar somewhere, it's just an arbitrary reversal bar. So this confirmation bar, this reversal bar in the direction of my trade, from the area where I expected it to happen, says everything is doing everything that I hoped that it would. You're going to redefine where the market should not go. You're going to put your new stop 2 ticks above that reversal bar. K-Dog, you said 5 years in and you still use the KISS plan? Just saw that. That's awesome. You don't need anything else. And the fact that you're still here 5 years later says something about it, doesn't it? Guys, this is it. You're either going to get stopped out for a smaller loss, or it's going to go to your first target. And I'm going to encourage new users. Don't shuffle your stops. Don't move your targets. Let it play out. You're on simulator. If it reaches your first target, one contract is automatically pulled off. You got paid. You're successful. Confidence comes from the memory of success. And you're going to move your stop to break even. And you're going to say, with that success, with that money in my pocket, I have absolutely no risk on this trade. And that's going to help you remember. That's going to remind you that the only reason you even took this trade was because the large chart said to, because the large chart has odds, favorable momentum, and nothing in the way. And guys, the second contract is a trust builder. You're learning to trust the large chart with absolutely no risk and money in the bank. And man, if that large chart wins, like it does so often, and it goes to your second target, well, that's a $300 trade. That's not a $300 day. That's a $300 trade. That is 3 to 4 minutes of your life typically. Taking the highest probability trade from the best of the best spot and managing it without fear. And if that's the best you do every day, is that one trade that goes the distance, that's a $75,000 year. And that's the part that people forget. Is the goal of day trading is to get paid consistently, day in and day out. And you don't have to hit a home run every time you step up to the plate. Consistent profits. And once $300 a day becomes effortless, and it will, I think, 500 becomes realistic, 1,000 doesn't seem far-fetched. And there's people in this room that have posted $18,000 days, $10,000 days, $7,000 days. And they're doing it with momentum and path, guys, and then just working their own plan. So I tell you every morning, I'm going to give you everything that you need to be successful. Once again, I'm going to give you the spreadsheet so that you can track your trades, so that you can look at those client trades. And I'm going to give you a zip file right now in the chat box, and it's called Everything You Need. And inside of that zip file is the Chart Reading 101. It's the High Probability Trend Trade Checklist. It's the KISS plan that starts you off on a high probability trend trade and takes you to the medium probability 50-50 trade. It's the PowerPoint that I use to teach every day. And then it's one more document. I'm going to drop this one in individually. So for my newer people, this is everything that I talk about in the first hour, 15 minutes of the day. And it is why we talk about what we talk about. 3 rules, 2 charts, keep it simple. It talks about the advantages that you're going to learn to recognize. It reminds you that once you understand momentum and path, you have everything you need to be successful. And then it breaks down the high probability trend trade, the rules, exactly where to find them, the indicators that you're going to use, and then it breaks down the individual advantages, momentum, what it means to you, how to recognize it, clear path, what it means to you, the areas, how to define it, what it looks like breaking and reminding you to be patient, and then breaking down the entry 100%, guys. So everything you need to be successful has been given to you. You now have rules. You can simulate. You can get feedback 15 hours live every week to make sure that you're constantly moving forward. You have a plan to trade until you can build your own. The only thing Nexgen doesn't provide you is repetition. The only thing I don't provide you is the drive to feel motivated, to take the pictures, to post in the room, to move forward a little bit each and every day. So that's my first hour. And as we get into the second hour, all we're going to do is we're going to look at the charts that are posted. We'll go back and forth in the live market. And every chart posted, I'm going to talk about momentum, path, and entry. I'm going to do it because this is an educational room. So whether it's a high probability trend trade or not, I'm going to talk about momentum, path, and entry. Which means some of you are going to say, but Mark, my trade plan doesn't have momentum as a part of this trade. And I'm going to say, tough, it's an educational room. We're going to point it out, whether it's there or not. I need you to tell me what you saw. Because if I know what you see, I know whether or not you're reading the indicators accurately and effectively. And if you make a mistake on your read, if you make a mistake on your annotation, we'll just correct it. I won't beat you down for it. But if you get it right, we'll celebrate it. Absolutely. That's the best of the best. When you show me your entries all the way to exit, I can also help you develop a management plan. I can point out things that maybe you didn't see in the moment. So take the time to annotate. Know that I'm going to go back to this. Resist the temptation to be the trade police, ladies and gentlemen. Trading is an individual sport. And all you're looking for as a brand new user is odds favorable momentum, a clear path, and a pullback to an area inside of triggers. And there it is again. This is the pattern that we just talked about. Morgan, don't let me down with this one. And there's Morgan saying, check it out. Triggers split. They're not weakening. They're still strong as long as there's space. The path is clear. The entry is well defined. And Morgan says he missed this one. But Morgan, there will be more. And look at that. He even defined where it was coming from. Great picture, Morgan. Great timing. That's what we talk about. That's exactly. Now the triggers are weakened. As long as those scissors are open, you have strength. And look what happens on the weakness. Bigger retracement, wrong side of the triggers. Look what happened with weakness. Good one. As long as they're open, Morgan, until they close. And that's when the advantage is gone. So guys, I'm going to take 5 minutes. I'm going to go stretch my legs. I encourage you to do the same. I think staring at a chart nonstop for hours on end is one of the worst things you can do. Morgan, let me answer that for you. I'm going to use interpretive dance and rhythmic drumming to answer this question. So brand new users, it either is or it is not. Black and white, right? Morgan, you're not one of my new users. You're going to understand that this is the best. This is always the best. No, it's fine. This is always my best look. And there's a transition phase until they become weak. So Morgan, when one line is inside, you can say to yourself, oh my gosh, I'm losing momentum. It's beginning to weaken. I no longer have separation, but I might still find an opportunity. And some of you will even say, even with the weakness, everything else agrees and I feel good about it, and you may find an opportunity. And then once they're inside fully, you know that the advantage is gone. So there is a transition period. But if you're a brand new user, your easiest path comes from letting it either be separation or not, and just avoiding the transition phase in the beginning. Don't feel like you have to think that much. Does that make sense, Morgan? Awesome. So guys, I'll be back in 5 minutes. When I come back, we'll get to the second half of the day. Go stretch your legs. All right, guys, I'm back. And I want you to see something. This is a market that I'm not trading. This is a market that I'm not in, that I'm not doing anything with. And I want you to see something that's pretty cool. So right here, I'm going to type out price reaches support, triggers above, term, no short trades. And then right here, I'm going to type out price reaches 1-to-1s, triggers below, term, no long trades. And then here, I'm going to type in weak triggers, smalls inside, rule 1 not met, and then let's just do this. Anything can happen. And then right here, I'm going to put odds favorable momentum, clear path, look for entry. And guys, this is one picture. What did that take? A minute? A minute and a half? And I've got a picture for my spreadsheet, or I've got a picture really for strong triggers. I have a picture for weak triggers. I have a picture for clear path. I have a picture for termination conditions. Guys, one picture I can fill 4 spots. This is for you people that are like, man, I don't want to do the work. I don't want to take the pictures. I'm not looking at this software because I want to get anything done. I just want to own software so I can magically become rich. Guys, that's not how it happens. But this is how easy it is to get good at what we're doing. And then all you have to do is, if you're just not sure, I think I took these right, but I'm just not sure, drop it in the room. And the second you drop it in the room, you're asking, hey, Mark, did I do this right? And I'll give you everything you need, everything I have to help you out. All right, so we're going to go through and start clicking on links. Guys, remember, I'm not the trade police. I'm going to point out what I see. This is, I like this. And Wayne, I love the annotation on this. This was fun because I was showing Trina how to chili dog. Guys, chili dog is a trade that was invented by a Nexgen user, and it revolves around odds favorable momentum and a clear path, believe it or not. And Wayne was explaining that all the management is done on the ATM. Get in and it either works or it doesn't, right? Let the chips fall where they may. So showed the sell market entry calculated spot. She said she understood. We went to the kitchen to eat dinner. And I left the sell order in place since the market was moving slow. As I was putting my bowl in the sink, I heard those sweet words, target filled. Because all it is a pattern. Your rules are either met or they're not. And I love this. This made me smile, just so you guys know. Really cleared the back of the bar just for you, Mark. Took all of price away from the decision-making zone. And it happened on the other charts as well. And it was an easy, what was that, $110? Whatever the target was. Great trade. Awesome trade, Miss Trina. So what's the one thing that you didn't have in your momentum style trade? And you knew I was going to point it out, right? You had weak triggers. Anything could have happened. And your small chart had weak triggers. Anything could have happened. And that's the only thing that I could say about this. But this is beautiful. The market is screaming down. It's broken the areas. The path is clear. And you find a way to capitalize just a little bit. And I love it. And guys, the chili dog trade is not a Nexgen trade. But I'm telling you, once you understand momentum and path, you're going to find a way to capitalize. And that's one of the ways that people are doing it. Great job, Wayne and Trina. And then Andy. Andy said a little JTFI and a second take at the initial loser. What does he mean when he says JTFI? He means just jump the fudge in. So everything's going up. The path is clear. And this is a great example of why momentum trades should have momentum. Because Andy took the jump in momentum trade. Trina, looks exactly like yours did. And with those anything can happen triggers, anything did happen. And it didn't keep pushing in the direction of the trend. And then he took it again as a trend trade. Nice job. But without that momentum, without that big push, you have to be prepared for those retracements. Nice job, Andy. One of my favorite things is when I started taking momentum trades, my brother would ask me, Mark, how can you take a momentum trade if you don't have momentum on your charts? And I would say, because I want it to go down. He's like, well, that's not enough. All right, Cav, strong triggers down, clear path. Me too, Andy. Little snap back right to the 1-to-1s. Easy money. Took a trade, 61.30. $140 trade. Easy money, Cav. Momentum and path. I'm going to say that a lot today. Momentum, path, pull back to the area of resistance inside of triggers, and it's just easy. Great job, Cav. Andy, it's amazing how effortless it becomes when you don't fight, when you go with the flow. All right, we got the Pete show real quick. Oh, I love this, Pete. How Pete ended yesterday. 2,000 on the main account, 7,600 on the following accounts. Grand total of 96.99. That's one market, guys. 2 charts, Pete. One market, 2 charts. Maybe 1 or 2 trades in the plan, 2 or 3 trades in the plan. Pretty outstanding, ladies and gentlemen. Pretty outstanding. Great job, Pete. All right, first trade of the day. 3 divergences, odds favorable. You enter just beneath the 1-to-1s. And then Pete, you know that I have to do this, right? You didn't get below the 1-to-1s. You got a tick below the 1-to-1s, right? And what did it do? It came back right to the 1-to-1s. There's your momentum trade. But one of the things about that jump in for most of you is these areas can create bounces. And if you let the whole bar get below, it typically makes it a little easier. And sure enough, it snapped right back to the areas inside the triggers and went down. It's a great trade, but I have to throw that out there. If you let price get below instead of just a tick below, it typically works out a little better. And took this one in sim to protect profits. So directly into a termination condition and lost. Does everybody see it? Even with all that momentum, directly into a termination condition, and it ran them right over. Didn't even hesitate. Didn't even high-five them for being a good person. And took this on sim. It's not worth risking money on. These are the ones that I'll encourage new users. I will encourage new users. Don't try to get lucky on sim. Because if this one wins for some reason, you're going to convince yourself that trading into areas that could stop the market is a good idea. Great trading, Pete. Took this on sim, didn't want to risk actual capital as price was heading directly into a term on the large chart once again. Market reverse, triggers roll, everything's up, hits the fib, comes up here, momentum, hits the fib. With all that momentum, you take the retest. And that's one of the things, when I say momentum can cover mistakes or momentum can create exceptions, With strong triggers, very often there's a retest. Not always, but very often if your small chart is strong as well, if there's no divergence, you'll get one more bounce before. And this is just the rest of the buyers trying to get their profits at the number before they give it up and say, all right, sellers, red line is yours. Great trade again, Pete. Didn't take this trade. A small chart talked me out of it. You're a big fan of strong tops. You had 2 of the triggers rolled. Not great momentum. They were too close to each other. There were terms in the way. And entry would have been here, but 2 things happened. 1, divergence. And 2, the mid band is in the middle of large triggers. This says don't take the trade. You chose not to take the short into the term. Great job. Following rules, avoiding a lot of losses. Strong top, divergence, odds favorable. And again, this is why I say if you let it get below the fib, you're less likely to get the bounce. But you do. And you're out break even with the loss of momentum. Large chart still good. Once again, this is a no-go for you because of the divergence on a 50-50 and because of the huge range. It's too much risk. You would need a reversal bar and confirmation to take it, and you never get it, and you don't take a loser. I want to talk about this trade. Because this is pretty awesome, guys. So check it out. Strong triggers, strong top, potential to break. And potential is just the potential, right? So on a 50-50, it's the momentum, that creates that potential to break. Are you guys with me on this? This is your medium probability trade. On a 50-50 look, it's that momentum that tells us, hey, this one has the potential to break. And here's your synonym. Divergence, true, equals loss of momentum. This is your small chart telling you that you're already losing momentum, that you're relying on to break the area. And then Pete also says the retracement zone is huge. My risk would have to be huge. And I'm gonna speak for Pete here. Because this is medium probability, because my risk would be large, because I'm losing momentum, I will only enter if he's laying demands here. The market gives me a confirmation bar off the area. So Pete's saying, I like the look. I really do. It's a good look. But it's not perfect. It's not worth that much risk to me. So if they decide to give me a reversal bar, I'll take a shot because that reversal bar establishes my risk. And you'll notice that they tried to fake him out twice, but Pete didn't fall for it. No confirmation, no trade, no movement in the direction of the trade, and Pete avoids a loser. Pete, I love the way you did this. And proof is in the pudding doesn't always. I wanted to give the rest of you that big picture. As you begin to speak in terms of advantages and when you know what you're up against, and I think this is such an important thing, when you know that it's only potential, you'll change the way you approach the trade. And when you're good at this, you'll force the market to give you what you want instead of just accepting and hoping. And it's, man, Pete, expert trading. I hope that makes sense to everybody. For you guys that are new in here, you know who you are. I know who you are. Just a reminder, this is the first day or two. Guys, day one, don't worry. It all clicks by the end of day three. There feels like there's a lot of information coming at you. I totally get that. That's why we break it down into only 3 rules. That's why we only talk about 2 charts. That's why there is definitely a path to get you to where you want to be. Understand that as you spend a couple days, it begins to click, the language begins to make sense, the patterns start to jump off the page. So don't feel overwhelmed, or if you do feel overwhelmed, just understand that it's normal, that it's natural. You're good. Sometimes I share mine just for grins. That was my first trade this morning. Odds favorable, momentum, and a clear path. It's just a trend trade. That's all it is. It's a little different look because I have a little different plan. Odds favorable, momentum, and clear path. Twice, guys. I do exactly what I teach in this room. I do exactly what I teach in this room. I wait for momentum, I establish my path, and then I look for opportunity because it works. Because it works. All right, Pete. Odds favorable. Everything is up. You take the jump in trade and ride the momentum all the way up to resistance. It's perfect. It's absolutely perfect. Once you have momentum and path, you will find a way. Once you have momentum and path, you'll see more opportunities to get paid. Great job. All right, Mighty Max. Are you trading off of 2 monitors? Or an ultra wide? So one of the things you guys can do, if you want, I'm not going to force you to, is when you click and drag and take your picture, you can get rid of the 17 days before your actual trade. Because we're trading here, right? I don't need all of this back here. So let's see. Really been focusing on the principles of the small and large triggers and seeing the small trigger moving below the large triggers. Would this be considered odds favorable momentum? I also entered before the scissors were actually created. So on your small chart, absolutely. Smalls are outside of the large. On your large chart where you entered, smalls were outside of the large. So Mighty Max, once again, I hope you're listening. This is one of those chili dog trades. This is the idea that when your large chart has odds favorable momentum and nothing in the way, and your small chart has odds favorable momentum and nothing in the way, you're going to find a way. And you did expertly, Mighty Max. Great job. That is an awesome trade. Momentum and path. Have I mentioned that yet? Momentum and path? It seems to show up in all the good stuff. Uh-oh, you got this, Morgan. All right, here's Jen. Smack bang into a term. Rule number 2 not met. I feel like smack bang is going to work its way into this room now. And because rule number 2 is not met, she chooses not to take the trade. And you avoided the loss. Great job, Jen. This is one of the good pictures, guys. Her rules aren't met. She didn't trade. So instead of taking a trade without advantages, she took a picture and talked about why she's not willing to risk her money and used the phrase smack bang. I love that. All right, Bob be the man. 50-50. Smalls have smashed through, large have not. You have a strong bottom. There's no divergence. And you take the entry. You know what's funny though, Bob B? Are you in here? Do you see that fib at 51 right there? With odds favorable momentum into the term? Did you notice that that's where you took your trade? Not at the 50-50 down here. You're pointing to the divergence high. Your trade is up here. You traded directly into a termination condition, right? Not 50-50 at all. You had already cleared that one. Divergence is in the rearview mirror, but you did reach resistance. Unless the market, hold on, you had room for profits. Unless the termination condition just smashes it to the downside, right? You ran out of room, Bob. What you had was the hope that momentum would retest. Does that make sense? Your path doesn't magically become clear because resistance created a big bounce. The same way your path wasn't clear here. And look what it did. It shot way up. And your path wasn't clear here. And it shot way up. And it did it here and it did it there. And I'm not knocking the trade. But if you say to yourself, this is a termination condition, let me make sure that I have strong triggers. Let me make sure that I have small risk. And let me recognize that this line could stop the market cold. So I'm going to manage aggressively, which is exactly what you did. You traded this beautifully, expertly, but it wasn't a 50-50. It was directly into a termination condition. And guys, this is that thing that I said earlier. Strong triggers very often retest the area. And that's exactly what happened, Bob. And Bob's like, dang it, I hate it when Mark points stuff out. But I'm gonna. When you know what you're up against, you know how to take the trade. Pete, directly into one-to-ones and it didn't work. That's how I know it's you. Odds favorable, directly into a termination condition, and it didn't work. Wiped out all your hard work, back to square one for the day. So the question, Pete, is why? Did you just get bored? I mean, you made some great money there. That happens sometimes. But you don't have momentum. The path isn't... I wasn't paying attention. Avoidable losses, right? That's all it is. And on that momentum trade, a lot of risk. A lot of risk. That's okay. Pete, I don't worry about you anymore. And I love that you're willing to post mistakes in the room. And guys, I want to show you something. And this is important for you folks that are new. Yesterday, Pete made $10,000 using the software, using his rules, trading his plan. Today, Pete made a mistake. Mistakes happen. Even when you know. Mistakes happen sometimes, guys. Be cool with it. Just pick up and go. I love it, Pete. And I think it's amazing that you clearly know what you're doing. And you're still human. And that, I think, for so many people is inspiring, because a lot of people beat themselves up over mistakes. When I was in a different life racing motorcycles, I had someone tell me, the difference between a novice and a pro isn't the mistakes you make, it's how quickly you recover from them. Do you let it affect your whole day? Or do you say, wow, screw that one up, let's go to the next trade, let's focus on following rules. So great job, Pete. And then Jen giving a lesson on what we call the gap theory. Jen, can I expand on your picture for the masses? And watch this. We actually have two great examples on here. So guys, the gap theory. This does two things. First, and when we talk about termination conditions, it defines the midband as a termination condition on the large chart. And what it is if price accelerates away from the large triggers and hits an area. Fibs, midbands, yellow 101s, guys. And that's what happens right here. It comes to the midband. Does everybody remember that price returns to large triggers? If the large triggers are a full bar away, price is more likely to close that gap. It acts like a vacuum. Too many C's, not enough U's. And all this is doing right here is it says this is a term, no short trades. And this is a beautiful picture. And you'll notice that it happened right there as well, right off of a fib and a midband. So you actually have two of them there. So even though there's odds favorable, even though it's coming from a strong top, you're saying to yourself, whoa, I have to pump the brakes. Price is more likely to return to those large triggers. And then let's see. And that time it didn't, did it? But it sure did there. And now price reaches the midband. The large triggers are not a full bar away. With this momentum, your path is clear. A lot of you are looking for entries there. All right, how we doing, guys? Great stuff so far. Great pictures. Pictures of when to trade, pictures of great trades, pictures of my rules aren't met, I'm not going to trade. It's so hard to say that. So hard to say that. Pete, beautiful large chart, strong top, divergence triggers roll, odds favorable. And you say, I'm going to find a way to capitalize on that momentum and clear path. And sure enough, you did. And then you missed the second leg, but that's okay. The dog appreciates it. And I've seen your dogs. He's freaking adorable. And there it is again, right off the termination, odds favorable. Find a way to make some money in between the areas with momentum, with path. Nice one, Pete. Odds favorable, clear path, potential entry, potential entry, potential entry, over and over and over. That was an expensive dog walk, Pete. You better get extra cuddles tonight. Andy, 50 ticks on the ES. This was your second trade of the day. Bought a pullback to a retest of yesterday's highs. Nice juicy fib on the 5-1. And you found a way to capitalize. Going a little outside of the high probability trend trade, without a doubt. But Andy took a class that Nexgen was offering in conjunction with some decade and a half long Nexgen users called the ALE class, using supply and demand and then the principles that Nexgen teaches to find those advantages. Great job, Andy. Great job. All right, Pete. Momentum weakening into a big fat fib. So there's that termination condition again. Getting in on the wrong side of the triggers. Maybe trying to make something happen, Pete. Weakness at a fib, guys. So don't have strong triggers, don't have a clear path, don't have an area inside of triggers. Maybe trying to force your hand on the market just a little bit there. Morgan, weak top. That's the emotion, right? The emotion is real. Odds favorable. You get below 97, everything is down. Doesn't give you your entry. So you ride that momentum and take it down. And Morgan, not confirming anything at all, right? Because it's not, no, it's a beautiful trade. So earlier I said a confirmation bar confirms that the rules have been met and true, right, Morgan? So in order to have that confirmation bar, it would have had to come from the area inside of triggers. It didn't. They tried to get there, it missed your entry by 2 ticks. And then, Morgan, if you had gotten in at the mid-band, would you have exited the trade here? Of course not. You would say, look at that momentum. Look at that clear path. And that's all you did. It's a late entry on a trend trade that didn't give an entry. It's entering the move a little late, but the expectations are the same with momentum and path. The best entry would have been up here, but it didn't give it to you. So you said, I still have every advantage. If I were in this trade, I'd hold it to the damn 1-to-1s anyway. Let me do it. Great job, Morgan. That's being in the moment. You've been taking, that's maybe not a bad idea with the volatility. There's a cost for confirmation, guys. You pay 8 or 9 ticks for confirmation. Andy, close yourself out. Surprised it didn't go up here because when I close myself out, usually they have cameras in my room. Your charts are so hard to read, Andy. You've got so many freaking triggers and lines and dots. I don't know what's going on. I see a long and a little bit of money made, and then I see you go long again right from the key area, and you almost get run over, but money made. Nicely done, Andy. But these are hard for me to read. It's okay. Looks a lot like the last picture, except the move wasn't as strong. Only got 30 plus ticks. You poor thing. Enter from this fib. Targets met. I love it. 3 divergences in the same price range. They come and retest the fib, and you write it up. Great job, Andy. And isn't trading amazing when you use phrases like, I only made $150 on this particular trade. I only made $300 on this trade. My first trade this morning, I was surprised when I look at my P&L. I was like, wow, that took 8 seconds, and it was a $500 trade. And then my second trade took about 12 seconds, and it was a $670, $680 trade. And I was like, gosh, I only made $700 on this one because it happened so fast. What a wonderful problem to have. Let's put our template back on here so that we can see the areas. Guys, that's it. I'm through all the pictures that you guys have posted. Well, I was. Keep them coming, guys. Keep them coming. Odds favorable, potential to break. Wanted to take this short, but didn't. When I look at the trade, I look at my risk first. So even though the large chart looked good with odds favorable momentum, I wasn't willing to put 30 risks, $30 or 30 ticks worth of risk on it. I love that. And guys, this is a great picture. This is the I'm not willing to accept that risk trade and chose not to. They were on NASDAQ. Steve, all I trade is NASDAQ. All I trade is odds favorable, clear path, and pullback. That's it. I've got one trade. And I'm not even using a 13.2 anymore on NASDAQ. I take all of my trades on the 34. I use one chart, one trade, no synthetic areas. I have hyper simplified down to what I teach in this room. And the results are amazing. One of the things you guys will realize is that when you really trust your plan, when you know what you're looking for, and I think more importantly, when you understand that there's more trades coming, that you don't have to make it all at once, guys, that's when trading becomes stress-free. That's when you start saying, well, that's not perfect, I don't want it, right? That's where Pete says, that's too much risk, I don't want it. I don't want to put $300 on there. Yeah, ES has been quick too. ES has been fast too. This is the ES today. I can't even get it all on one screen. If you showed me this picture without showing me which market it was, Andy, I would say it was NASDAQ without hesitation. That's from 8:45 until now. That's 2 hours. There's a lot of shenanigans in the market this week. But the cool thing is there's plenty of opportunities inside of those shenanigans. Well, it looks like chop when you tighten it up like that, doesn't it? What's it look like here? Odds favorable, clear path, potential to break, broken area but not strength. Where else? There's a lot of opportunity. There's a lot of opportunity. Odds favorable, clear path. There's a tail. Odds favorable, clear path. There's a tail. Maybe not there. Potential to break. There's a tail. There might have been 30 minutes in between. But there is all sorts of opportunity in the market, guys. And as soon as you learn your pattern, the market slows down. The opportunities become easier to find. If you're not sure what you're looking for, you can second guess yourself until the trade is gone. That's why I think taking pictures is so important, guys. Recognition comes through repetition. The more time you spend looking at the same pattern, the easier it becomes to see that pattern in a live market. Perfect top, and that's what sets off the reversal. Some of you found an opportunity, some of you didn't. If you're my chili dog trader, your entry was right here and probably out before the fib. Morgan, did you catch it? Pete probably got in closer up here. You had a fib? Just momentum and path, guys. You'll find a way. That's the chili dog entry. That's Wayne's entry. Right in the middle. You sure did. I don't have that one. I did a rebuild. When did I rebuild? I rebuilt recently. Oh, and that may be it. Steve Diego, NASDAQ moving so fast. Yep, 13.2 triggers constantly separate from price, then reload historical data over and over. My idea of a 34.5 only makes sense on the NASDAQ. Steve, it's a little different approach. It's a little different approach. So large short leads the way anyway, right? So if I have odds favorable momentum and a clear path, I'm just looking for an entry. And I use this little white line to help me pinpoint entries. I use that 21 EMA. But even the 34 is screaming. And it was too fast to trade yesterday. But this morning it moved pretty well. But you'll notice that I ignored everything that wasn't perfect. I ignored everything that wasn't perfect for, I don't know, that's only 15 minutes. And then I got paid at areas. And again, odds favorable, clear path. That's the look. That's always the look. And then I had areas over here. where I took my exit. Guys, I'm not a smart man. Less is more for me. The fewest moving parts I can have is typically the best. You feel it's tradable today for the first time in 3 days? Well, it's only Tuesday, so Sunday's pretty rough. I know, I'm just messing with you, Gino. And that's the thing, is you have to decide whether or not it's tradable for you or not. Whether or not you have what you need. Andy, everything says down and you didn't get your entry. It happens sometimes. Do you trade with your small chart that small, Andy? Nice. Gino, I trade one contract in the NASDAQ, and I'm finding that even with the one contract, it's pretty easy to get between $700 and $1,000 a day. Pretty consistently, almost every day. And what's nice is if it is one of the losers, right on, Andy. If it is one of the losers, for me, it's a $150 loser, not a $300 loser, and that keeps you in the game. You make it that small to take the pictures. Right on. Yeah, Gino, you know we all go through it, right? First, we try to find every trade, and then we simplify, and then we try to make all the money, and then we simplify, and that's just kind of how it goes. Instead of trying to buy a new boat every day. Amen. Amen. Has everybody seen this? This is your homework if you haven't seen it. Moneyball. Ladies, it's got Brad Pitt. You'll love it. Moneyball. Get on base. And that's it, right? Get on base. And the whole premise for the A's back in the 80s was they couldn't afford home run hitters. So they got people that got on base, because when 4 people get on base, it's a home run. And guys, trading is very much like that. Get on base. Base hits pay bills. Quick profits pay bills. Repeated profits pay bills. Consistent profits pay bills. And that's the goal. We forget that the goal of day trading isn't to make it all in one trade, but to make it consistently, to build a career out of it. To not have to go back to work. To do what I'm going to do, right? When class is over, I'm going to get in my car and I'm going to drive to the golf course, and I'm going to go let something else frustrate me. So it'll be fun. That's the goal. $400 a day is a 6-figure income based on your trading. And the problem is we all start day trading, and we know that we're capable of making that 6-figure income, but the challenge is we want it tomorrow so that we can quit our jobs tomorrow, right? I need to make $10,000 today so I can buy myself a cushion and quit being in the workforce tomorrow. It's not realistic. But at $400 a day, guys, $400 a day is $2,000 a week, is $8,000 a month. Prove to yourself for 3 or 4 months that you can do that. Add a couple contracts, right? Use a trade copier. Pete didn't make $10,000 yesterday on just 2 lots. He used a trade copier. He's got 10 accounts going. You're semi-retired, next month probably 100% retired. I love that, Andy. More time to go get some Kansas City style ribs. I couldn't retire. I could never do it. I would go absolutely nuts. With moderation. Not for me. I love ribs. Divergence with fib and midband well outside of large triggers. What do you think, people? So let's see. You've got weak triggers and a clear path and no areas inside a trigger. So 2/3 of your advantages are gone, Pete. 2/3 of what you're looking for has already left the building. Barbecue smoke, not the weed. If you do one, the other tastes even better. I'm not condoning or advocating, but you can eat a lot more ribs. The other one's there. Vanilla ice cream is your jam. I like it. Lucky Charms. So what happened with it, Pete? Did it go down? Because there's two ways to look at that for sure. All right, Joel. Joel, I figured out your mojo yesterday. Your charts are so much easier for me to read now. So fibs held, triggers never crossed, and you had 3 divergences. And when divergence printed, you said, this is an area likely to stop the market. My small chart is showing me change that the large chart can't seem to show me. And just expert. And Pete, you entered with a confirmation bar. Joel, I love what you're doing with this. And I notice that you don't have a short because there's no divergence. And you don't have the short because it's not right off of a fib, right? But here, termination condition. Divergence prints, triggers roll, you find a way. 3 divergences, you don't even wait as long. You're like, I can't wait to be a part of this. It's pretty cool, Joel. Awesome. Andy, have a great one. Great trading today. It's fun for me. And what you guys will find is that you'll post 5 or 6 charts in the room. And we kind of feel each other out, and I learn your language, and I recognize your patterns, and then I realize that you know exactly what you're waiting for, and your patience is great, and I love it. And Pete, you entered on the confirmation bar. Our charts look a little different, and that's it. Sorry, I never mean to. Clear path, tail into momentum. Wait for price to clear the big fat fib. Jump in, 10 ticks. I love it. Momentum and path. Sorry to miss that one. That's it though, right? Momentum and path. Momentum and path. Say it with me. Momentum and path. Great job. Termination. Divergence prints off the termination and go. Consistent. See, and here you didn't let it get there. So Joel, this one, you say entry at reversal bar. I disagree. You entered on an up bar with odds favorable momentum up, with a clear path on the large chart coming off a termination. Do you see how it's easy to convince yourself that you entered on a reversal bar? You didn't. And you didn't have your termination. So all of that, Joel, I love your patience. You've just proved that you're human and you can get a little impatient. And then once it made it to the termination, easy money. Do you see the difference between the two, Joel? No termination. Everything says up. No divergence. Termination. Then you get the divergence. And then it makes sense. Odds favorable, momentum up. Weak triggers. Big difference between the two. Same result. same result, and you said there wasn't any divergence at the pullback. Yeah, I'm looking for a trend trade there. And it may have gone up and hit it and then come down. Subtle differences. All right, guys, I'm going to take a break. Let's see what this termination condition does with weak triggers and multiple divergences. Joel's already long. Joel's like, I'll see you guys at the mid band. I'll be back in just a minute, guys. Go stretch your legs. Gas prices are going down. All right, Pete. There it is. He has path. Drill, baby, drill. This is what I wanted to talk about. I'm glad that you put this in there. So one of the things, guys, when we talk about termination conditions, price reaches an area, where are my triggers? That's always the recipe. Price reaches my area, reaches an area, where are my triggers? I want you to see how you may eventually reverse engineer that. Price retraces to Fibonacci resistance. Where are my triggers? They're all below resistance. Resistance is likely to stop the market. Resistance is likely to create an untradeable bounce. Pete knows that. Pete says this is the area that's likely to stop the market. If I get confirmation off of an area likely to stop the market, I'll see if I can keep going to the next, and just, it's perfect. And that's kind of a reverse engineering. Initially, we use termination conditions. No more short trades, not into that area. But when they come back, when the area breaks, when support becomes resistance, you can begin to look for opportunities. And Pete, you really did a great job with that one. But it's the exact same verbiage, creating an advantage in the direction you want to go. Josh. How you been, Josh? Odds favorable? Almost. Clear path? You betcha. Pull back to the area inside of triggers? 100%. And easy money. And look at you holding those trades. Great job. Wonderful job. And not odds favorable, right? But it's still a line out. And Morgan, we talked about this earlier. You'll say, I've still got momentum, even if it's not the perfect momentum. But I also have a clear path. And I also have a low risk entry. And why wouldn't you, right? Great job, Josh. And then everything is down and there's nothing in the way. JTFI, baby. Quick $400 trade. Because when the only thing you're relying on is momentum, momentum goes away. Why not make a little money? Make it quick. GTFO. JTFI, GTFO, right? And it works out. Great job. Great trading. And remember when that mistake put you at zero, Pete? And you had two choices. You could emotionally trade for the rest of the day and make that zero a deeper hole, or you could get back on your plan. And I'd say that's a pretty good recovery there. Nicely done. Don't have momentum. It is a clear path. Termination, divergence, Small's roll. So Joel, what we have here is literally a trade that Nexgen started teaching in 2004. Let the fibs hold, let the small triggers roll, and do you see where the tail hits those small triggers right there at the large triggers? That's the 2004 edge trade. And you get in with confirmation. And then they come back. They're like, oh no, Joel, did you get in? Oh, you're there? Okay, cool, let's go. Great job, dude. But this is a trade that Nexgen started teaching in 2004. It says, let the fibs hold. Let the small triggers on your large chart roll. And buy or sell the pullback to those triggers. And what it looks like on the small chart is the large triggers, the pullback to the large triggers. It's a great pattern. Great execution on that one. Nicely done. All right. Trina, how are you doing? Can I answer any questions for you? Lance, welcome to the room. Can I answer any questions for you? Bob, Nanda, Wayne, T45, Steve Diego, John 20, Mighty Max, Morgan, Vad, Gino, Joel, Pete, Chariot, Jen, Marky, Mark, Mike, E, Sounds like a rap group there. Marky, Mark, and Mikey, yo. Danforth, Sid, Joel, Boaz, Joel, Chalisk. All right, I've said every name in the room, which means every one of you has the opportunity to ask a question. You have been granted. Good to see you in here, Marky Mark. I love it when you guys come back to the room. Learning something every day. Me too, Nanda. Me too, every day. That's my goal, every day. 1% better, right? 1% better every day. All right, let's do a live chart read. Strong trending market, 30 bars plus in the same direction. I like it. I'm rooting for you. Sell the mid band until it stops working. Taking time to reorganize notes? Awesome. Let me know if I can help. You guys know I love to help, right? I do love to help. Joel, man. Great top. First short. You get in, make some money, pulls back to the trend trade, get in, make some money, pulls back to the trend trade. Didn't quite get there, so you catch it on the way down. Make some money. I mean, come on. Is this today? Is this you just crushing the market today? Saying when I have momentum and path? Not today. Do you have a bunch of pictures? Drop them all in, Joel. Don't feel like you have to do them one at a time when I read them. Just dump them. We've got about 30 minutes. And guys, you can picture dump all day long in here. I want to see everything you're doing, all your practice, everything. You don't have to do them one at a time. Drop 10. Just make sure you hit enter after each one. Drop them in. I want to see them. I want to help. Just great job. Got your mojo, baby. Oh, look at that termination. Did anyone realize that that could have stopped the market? So termination stops the market. Small triggers roll. Buy a pullback at the small triggers. Whoa. 2004, guys. That's when that trade started. How cool is that? In 2004, Nexgen said, hey guys, if a Fibonacci area holds and the small triggers roll, buy or sell a pullback to the triggers. And if a Fibonacci area holds and the triggers roll, buy a pullback back to the triggers. That would have been pretty nice. That might have been a couple pennies in the bank account. And then it gets up to that mid-band area. Large trigger's not a full bar away. And sure enough, it closes the gap. It's all patterns, guys. That's all it is. Odds favorable. Potential to break. Exit right at your entry. No divergence, strong triggers, you get in. And then when divergence prints, because it's a 50-50, you take your exit. Outstanding management. Maybe held that one a little long. Such a great entry. Everything up, all the momentum. And you exited right at your entry. And I'm obligated to point that out. But great job re-entering. And then when divergence prints on your 50-50, you say no. You let it go to the fib. All the triggers stay up. And you just let it roll a little bit and get it again. Gosh, Joel. Great trading. Just outstanding. Ooh. Everything says up off the term, but you're into another term. And you jump in. And they get you right at your entry. Mark will break the monitor if I call it a confirmation bar. You didn't, but what did you do? Can we talk about what that pattern is, Joel? It's not confirming anything. Everything is up, everything is strong, the path is clear, life is good, can't wait to go long. And the small crowd fights and fails almost instantly. And you get up after their fight. You get in with all that momentum after their fight. They do it again right here. I love this trade. You let a little fight happen, and when they fail instantly, you're like, we're going up. And you do it. Great job. But you're right, not a confirmation bar. And then, let's see. There it is. In on the trend trade. Perfect. Out. Divergence prints, you exit. Beautiful. And then when a third divergence in the same price range prints, you say, whoa, that could create a big ugly push. Let me enter and take it down to trouble. My gosh. Third divergence. Sold the reversal bar down to the fibs. Beautiful. Joel. Outstanding. Using small chart change that you can't see on that large chart, finding a way to capitalize. You have the momentum, not even a 50-50 though, Joel. Termination, potential to break, potential to break. But the one thing that you do is you let it get above all the fibs. You still had a divergence high to contend with, but you're like, man, I just don't want to trade into it. Let me trade from it. And it makes all the difference in the world. Does that make sense to all of you that are watching the Joel show here? Instead of trading directly into the fib, he lets price get back above it, and then he chooses to enter, trading away from trouble instead of directly into trouble. And when you know where trouble is, guys, I'm telling you, that is a solid lesson for the masses. And then when it's all up and there's nothing in the way, chili dog today. Joel, I love it. And what a great exit. Couldn't get any room to enter. Just run. Great job, Joel. I'm not sure you needed feedback, but I sure do have a good time talking about what a great job you're doing. That's fun for me. All right, test new way. Strong momentum on the 21.3. This is brilliant, Boaz. Use the momentum from the 21.3. Clear path. And you say, because everything is down, let me find a way. And you do it beautifully. And Boaz, can I point something out here? And hold on. Oops. I want to do it a little bit smaller. It's odds favorable momentum in a clear path and pull back to an area. Do you see it, Boaz? That's all it is. You could pretend this was a 13-2 and a 5-1. It's odds favorable momentum in a clear path, and it's a pullback to the area. But the 13-2 is kind of big, so you refine it even more on a 5-1. I love this trade. And I think we talked about it, right? This is when you can take these. You can because it's just a trend trade. Big chart, little chart. And then big chart, little chart. It's perfect. I love it. When I've got odds favorable momentum and a clear path on my 21.3, if you're using that one, I'm going to find a way. Great job, dude. Just remember that this is such a slow chart. Such a slow chart. Like inside of this bar from 95 to 0 is huge. So I like to use it. If this doesn't have it, but this does, I'll look and see where the areas are here. This would be the Nexgen momentum trade using a higher time frame. Great stuff. Odds favorable, clear path, pulls back to the mid bands in the retracement zone. Anybody catch those and say, wow, my rules are met? Odds favorable, clear path, pull back to the mid band in the retracement zone. There it is again. All right, so who skipped this one because they thought they saw 3 divergences? Guys, remember that rule for breaking areas when the small and the large get above the area is broken? You had 1 divergence, you had 2 divergences, and then when the small and large got above it, that's only 1 divergence on a high probability trend trade. Ladies and gentlemen, that was an outstanding look to try to make some money, and then a second divergence pushes it lower. But there was $100 in there pretty easy. Weakness, big retracement, all the way to the areas, triggers don't follow, closes the gap to the area, to the triggers. Gap theory, once again. 3 divergences in the same price range. Just nothing to do, right? Not if you're a high probability trend trader. Great job today, everybody. Nicely done. I'm going to get you guys today's broadcast because